Holly Shields here for Calcine Media. Looking to rake in a monthly dividend of $1,000? This is how much you should invest. But first, please sub to our channel and press the bell icon to get notified on our latest videos. Making $1,000 in dividend income each month means a dividend income of $12,000 each year. So you must choose a dividend yield target to begin with. For a dividend income of $1,000 per month, experts advise an annual yield between 3% and 5%. A dividend yield target of up to 5% can be a good target. First up, it's important to choose a desired dividend yield target to start with. Experts advise not to go for a stock with high dividend yields since it can bring a greater investment risk. Suppose a company pays $5 per share annual dividend and its share price is $100. Thus, the dividend yield comes out to be $5 divided by $100, or 5%. Investors should always do their homework when choosing a desired dividend yield target. There are companies paying high dividend yields as of now, but with the possibility of suspending the payout in the future. Such a dividend stock could be unsafe for an investor. A portfolio generally comprises a range of stocks with different yields. These stocks combine to generate an overall yield for the portfolio. You can calculate your portfolio's yield by adding up the annual dividend paid by all the stocks in your portfolio and dividing the aggregate number by the market value of the portfolio. This will give you the amount needed to make $1,000 in dividends each month. Since your annual dividend income should be $12,000 and the largest target dividend yield taken is 5%, the investment amount required is $240,000. That is annual dividend income divided by dividend yield. So for a portfolio with a dividend yield of 5%, you must invest $240,000 to make $1,000 in dividends each month. That's all well and good, but which stocks should you select? Well, you can search for fundamentally strong companies with a history of regular dividend payout. You can further select stocks that have increased their dividends in the last 10 years. Also, the stocks should have high liquidity. You must ensure that each stock picked should have a dividend yield in the range discussed above. A dividend yield of around 5% is good for these stocks as already discussed. But how many stocks are needed for your portfolio diversification? Well, according to experts, a highly diversified portfolio may include between 10 and 30 stocks. You may start with 10 stocks and increase the number with time. In saying this, you must be clear about the period required for you to reach your target of making $1,000 in dividends each month. The stocks should represent different companies, industries, and sectors. You must be clear about the dividend payment pattern of a stock or when each company pays the dividend in a year. The company may either pay a quarterly or biannual dividend. Many ASX-listed companies pay dividends twice each year, usually at an interim dividend and a final dividend. Companies are not limited to paying twice a year and may pay more or less. You must equally balance the number of stocks in each payment pattern category so you can get dividends every month. The bottom line is that investors must always consider the volatile nature of dividend stocks while investing in them, as a very high yield is not always a healthy aspect. So you are advised to conduct a thorough research before going forward with the purchase of dividend stocks. We hope you like this info, and please like, share, and comment on this video. Give our channel a sub, and while you're at it, press that bell icon. For regular updates and info, log on to our website at calkinemedia.com. This has been Holly Shields for Calkine Media.